politics into the economy. And it's been one good news after the other in Nigeria, from security, the rescue mission in Orire, local government area of Oyo State, to the improvement of our economy, precisely with the Nigerian stock market emerging as the best performing equity market in the world as we speak today. And the Nigerian Exchange Group NGX benchmark index delivered a 67% to 68% year-to-date return, driven by economic reforms, a stronger naira, and improved foreign exchange liquidity. We have somebody in the studio with us this morning. He's an incurable optimist when it comes to the economic reforms of Mr. President, and some of his projections are beginning to play out as we speak. We have in the studio with us this morning Oluseyi Odufuwa, MD CEO, Capital Plus Limited, is equally financial advisor. It's our pleasure to have you.
Yeah, thank you for having me.
Good morning.
Okay, I see you smiling and looking at the stock exchange of Nigeria as we speak today. Is the best performing equity market in the world. And we have had you several times on the show. Are you telling us that we should believe in the economic reforms of Mr. President? Are you surprised that our equity market actually emerged the best in the world, displacing that of South Korea?
Well, I can't be surprised because we have given these projections since 2023. You know, when the government came into power, we saw the programs, policies that they wanted to run. We saw sincerity in this government, and we also saw that they were disciplined, you know, from day one. Any government that was ready to take the bull by the horn, every other government had tried to follow the easiest route. But Mr. President, the current president, decided to, you know, go through the hard route. The first two policies, we have discussed it severally, you know, harmonization of our
Forex market,
our FX market, the Naira, we harmonized it, and he removed subsidy. It was very tough. Nigerians endured for like 2 years or a little bit more, and we were sure.
We're still enduring.
And we are sure, you know, very strongly that you know, we had gotten to our equilibrium point, and after equilibrium point, you know, the curve had happened in economics, and we were sure that our projections will begin to come better. And it started getting better, you know, somewhat like 6 to 8 months ago, until, if you look at inflation from about 38%, it came down to about 14. Later it bounced back to 16. And the reason why it bounced back was the war between Iran and the US. It was because Nigeria is a mono economy. We depend on oil. Our mainstay is 97% of our foreign earnings, FX earnings, is oil. So it affected us greatly. Thank God for Dangote refinery. We have no cushion at all. There's no working refinery as we speak in the whole of the country. You can imagine if we had had 1 or 2 refineries working, I tell you, oil boom straight up. Because benchmark at around $75, oil got to around 120. So we should have had a major boom. But because Dangote was subsidizing for us, you know, we couldn't earn too much in that aspect. But once the impasse is fully settled, that's from the Strait of Hormuz, where, you know, about 45 to 60% of passage of goods and services pass through, including oil. You know, once it's fully settled, we'll come back to reality. But as we speak now, the capital market, which is the barometer of growth in any economy, you know, we can see clearly. The last time I came here, I said it, that in Naira terms, 57% year-to-date, you know, earnings. Where will you get it in the world? It's nowhere. You know, in dollar terms, 67%.
Right.
There's a difference between both. But you can imagine that kind of statistic. Where else will you get that kind of returns? And, you know, we're also predicting that from mid-year to the end of the year, though the market is saturating as we speak, profit taking is going on, so a little bit bearish. You know, market has lost about 4 trillion in market capitalization in the last 1 or 2 weeks, but it's normal, you know, because the market must fluctuate. It's about the forces of demand and supply. So, but at the end of the day, look at the kind of economy we had. Even the last time I also mentioned it here that, you know, people still feel that the lowest ebb of the masses are still feeling a little bit of pain.
Right.
A little bit of pain. Pain will always be there.
Okay.
Pain
will always be there.
It will always be there if you don't take the right positions.
Okay.
That's what I mean. And in taking the right positions, economy has shifted. And we will not go back to the old norms anymore. You can't buy your bread at, I don't know how much they used to sell it before. I really don't know, but maybe 500, 600, if I'm correct. I doubt it if you can buy it at that price anymore.
You probably get some at that price, but maybe not at as they used to be.
Maybe the one filled with bromate. Maybe.
Probably.
So, but you know, if you look at internationally too, you know, things are shifting. You know, inflation is everywhere as we speak.
True.
The economy is growing at about 3.8%. The US economy is growing just at 1%, UK at 1%. So are we doing well?
Oluseyi,
you know, it's better.
I'm sure that, you know, with all you've said today, and just like Adebipe chipped it in earlier, that the bottom, yes, at the masses are still complaining bitterly about how the economy is at the moment. But in a bit, we'll talk about how they also, at that level, can benefit from what the stock market is offering.
Yes.
But from the explanation you've given so far and the fact that this particular report we're celebrating is from the Bloomberg, you know, putting the Nigerian stock market ahead of South Korea. North Korea? South Korea.
South Korea. It can't be North Korea.
South Korea. So let's look at some of the sectors that have really contributed to this growth and link that also with investors' confidence. Because I know that the last time you were here, you talked about the fact that we should also begin to look at how massive investors want to come back into the country and putting their money where their mouth is. So if you'd like to take a look at the sectors that are really contributing to what we're currently witnessing on the stock exchange, what are some of those sectors that, off the cuff, you will mention?
So, largely above all is the banking sector. If you talk of liquidity, is the banking sector. If you talk of exit points, because for every investment, you must have an exit point. Any investment, if I want to do financial re-engineering for you now, one of the key indices I'll look out for is your exit point. I want to exit this business. How soon can I exit and when can I exit? Can I exit immediately, comfortably well? Exit point is key. So the banking sector provides liquidity to any level you want to invest, and you can exit at any point in time. That is confidence. And what are we talking about? In the last 2 years, the banking sector raised about 4.7 trillion naira. That's about 3.3 billion US dollars. You know, which is giving confidence in the market. So apart from the banking sector, oil and gas, so many major deals, so many provisions made for doubt and bad debt in the past. That's kudos to the Central Bank of Nigeria. And look at the consumer goods sector too. You know, what people are consuming now is far more. Population growth, you know, more in earnings, you know, thanks to the president too for increasing minimum wage as well. And across all.
Even the minimum wage, a lot of people are still complaining that it's not minimum.
People will always complain. It's normal in every society. And that's why I keep on saying that, you know, we must transit, and that's the second question you asked. We must begin to transit from that docile point of view in terms of investment. We must move from consumption to, you know, I don't want to use the word production. No. Consumption to investment. So investment will build more to be able to use to consume. You know, for instance now, those products you consume.
Let me quickly hold your thoughts. We will take a quick break. When we return, we'll pick this conversation from investments, which...
That's what I was about going to.
So we will take a quick break and we'll be right back.
Okay then.